So, what do you think of my proposition that the energy transition is really no such thing, that it's really about energy addition and transformation? Have I already provoked you?
Yes, you have, because I think it's only semi-true. I do think that, of course, the addition is a significant factor, and clearly, sort of, if you look at the statistics, you don't see the transition in such a significant way yet. But if you look at the progress that is going on, driving a lot of new technologies, a lot of new approaches, I think that the transition has without a doubt started. It's exciting and it has a long way to go.
Well, all of those things are probably true, right? That it's both a long game, right? So, but also that it has started. So I'm glad you emphasize both. And if I'm not mistaken, you have financial vehicles. It's quite interesting. You have a leading business school degree, an unusual pedigree for someone in your position. You're a financially savvy guy, and you're putting your money where your mouth is with both risk capital, early stage, but also long-term patient capital. Am I right? Can you
Sure.
tell us about the two prongs of your strategy?
Yeah. I look at the transition, the energy transition, from sort of different points, but clearly my main responsibilities are the one of being the chairman of LGT Private Banking and LGT Capital Partners. One is a private banking business, one is an asset management business, and I'm also looking at it from the chairman of Lightrock position, which is an impact investing business that we have started, and so there we sort of look at the energy transition as a mega trend that will sort of play out, as mentioned, over many years. I think your point that you made, that it's still relatively young, I think is absolutely true, but I think we pride ourselves being privately owned, both at LGT and at Lightrock, to be long-term oriented investors. We sort of have it probably a little bit easier by being family-owned businesses to be long-term oriented, and so our sort of claim is looking forward for generations, and hence we see this transition as an interesting one from an investment perspective, and of course we also sort of see the other characteristics that it has that you have mentioned in your introduction, sort of the political side to it, the moral side to it, frankly. And the broader economic side.
Well, let me pick up on that point about the moral side, right? Most financial investors don't emphasize that. Markets are amoral, right? Where we look to our own values, and markets are about efficiency, not morality. So what does it mean to be a moral investor? Does it just mean you invest in things that don't make any money?
I wouldn't define myself as sort of as the moral lens to be the only one, but of course it's an important one. It should always be an important one. But of course, our sort of we need to generate the returns for our clients to be happy with us.
Right.
But if we can do that with the right moral lens being applied, I think our clients should be even happier with us. I think that has worked quite well. I mean, over the last sort of 20 years, we have been growing more successfully on the private banking side than almost all of our competitors. And on the asset management side, we have, I would say, also done very well. So I think that philosophy has worked to our advantage. I do think that one of the key problems of the lack of sustainability and the sort of the energy transition only being as far as it is frankly the huge weakness in our broader political and economic systems of not being sort of looking forward enough, being much too short-term oriented. And so we are actually very proud to be long-term oriented and think that it continues to give us a strong edge also on the investment management side and generally in business.
So, what is the role that public policy plays, in your opinion, when you think about investments, particularly in climate-related areas? And we all know there's an externality involved with climate pollution, right? Greenhouse gases. In some parts of the world, notably the United States, there is no federal carbon price or greenhouse gas price. The only action ever taken at the federal level to price a greenhouse gas, which was the methane rule that was passed under Joe Biden's Congress and the IRA, has just been repealed by the U.S. Congress. So even that small example doesn't exist anymore. So and of course, although some states have greenhouse gas pricing, without a carbon price or some equivalent policy, one is asking quite a lot of markets and investors. So what do you see as, do you invest primarily in markets where there is supportive policy, or are you agnostic? You invest regardless of policy?
I think good investors always sort of look at things in a very comprehensive way. And sort of policies naturally always matter a lot. And you've pointed out that one of the key challenges has been that sort of the environmental and social externalities have not been sensibly integrated into our market systems. Partly they have. If you look at the mandatory carbon markets in Europe and actually in all the other parts of the world, I think one can say that they could have been sort of set up a little bit faster, but are they working well? Yeah, they're actually working remarkably well. So policy plays a huge role. We always look at it. It's interesting to look at the different sort of geographic blocks and how it has played out. The approach in China has been a very different one from the approach in Europe, and again from the approach in the US. It always matters, and in order to transition more rapidly, we will need to get more of that, and that's where media can and should play a great role, and that's why I'm happy that the Economist is pushing this conference, because clearly, if the media sort of uses its power to influence people and politicians to lean in a little bit more, it will be easier.
Well, let's lean in a little bit on your geographic point. You talked about different parts of the world. I imagine you're a global investor. Your companies invest not just in Europe or locally. When you look at investments on two sides of the Atlantic, in the US versus Europe, do you find that you get better returns in Europe, where you have strong carbon policy, carbon taxes, carbon regulation, or that's not necessarily the case?
Look, sort of, if you look at GDP growth, then clearly the US has done better.
Right.
Sort of, and Europe and the US have been at the same level 20 years ago. So clearly returns in the US have been higher. Why is that? That's a sort of course, a big question. But the fragmentation of Europe and sort of less boldness than the American sort of show typically when they go at things.
From the perspective of the entrepreneur and the company itself, not the investor.
Across the board, you sort of look at regulations.
Yeah.
Europe has started early on the regulatory side, but it has been quite fragmented and quite bureaucratic. And, the US comes way later at it and goes at it in a quite bold way. And all the Europeans feel like, hey, this is unfair. And the truth is, no, it's not totally unfair. They just have been a little bit bolder.
Right.
And probably we should learn from that.
So your returns have been greater in the States, even though my thesis about carbon externalities, carbon pricing didn't work out. The more dynamic nature of that economy, the higher growth rates, and I'll bet you the tech sector probably drove a lot of those returns. Am I right? You have technology investments in your portfolio?
Yeah, absolutely. I mean, sort of I think the most significant opportunities in this sort of energy transition megatrend, it is all, or most of these really interesting opportunities have a strong technology angle.
And we're here to talk about that. Can you give us an idea. Is it all AI all the time, or do you see climate-related technologies as broader than that? What's the most interesting? I know you're invested in hydrogen, for example, and your invested companies are looking into that. Some of these areas are quite policy dependent and are stalling because policy seems to be a problem. Markets aren't emerging as quickly as we had hoped. So, is technology a double-edged sword as well?
No, I think for companies it's all about developing an edge, and the edge can come from different areas. But of course, technology can be sort of a great edge, especially if you can secure the technology advantage that you have as a company through patents and so on, or through new processes that are difficult to copy. So, we sort of. If you look at our investments, for example, at the Lightrock Climate Fund, you will find that sort of 2/3 of it have probably a strong technology angle.
I'm going to ask for any questions. Please use your Slido, the website. You would have seen the QR code you can go to. It's up on the screen. Or if you're hankering to get a question in, wave your arms around, and there's a gentleman urgently desperate to get a question to the Prince. So let's go with you. We'll give you a gold star for your getting us going this morning. We just have a couple of minutes, so a short question, short answer.
Really interesting.
Please identify yourself and make it a question.
Chris Wellsford from Ayers Punchard. I'm an investor. The short-term versus the long-term argument isn't something I've understood from the conversation so far. I think it needs challenging. If you're a long-term investor, how do you deal with the short term? Because it's a massive pressure.
Look, I think if you have short-term pressures, sort of ideally you have long-term capital, right? You want to be able to be robust in your investment strategy and in your investment setup. So to have capital that is long-term enough in your orientation, I think is an important hedge, sort of edge to have, or important approach to have. So we predominantly invest in these strategies through private equity type funds that have a longer term time horizon.
It helps that you have shareholders who are perhaps long-term thinking. Am I right? Companies that have to invest in the quarterly basis or have pressure from private equity or hedge funds coming after you may be more challenging.
Yeah, it clearly is hugely helpful to not have to convince shareholders every day that they shouldn't sell your stock tomorrow. I mean, that's just generally a huge distraction. So if you don't have to deal with that,
right.
It makes life much easier.
Yeah.
But if you look at the value creation, and if you sort of benchmark the development of LGT relative to most of our competitors, certainly the core competitors, you will see that our shareholder has not done such a, can be quite happy.
Right. And we do see across with the sovereign wealth funds, whether it's Norway or whether it's with the Middle Eastern oil funds or Temasek out of Singapore, we do see another model for long-term investment that's playing quite an important role in energy tech and climate tech. We're seeing an $80 billion fund out of the Emirates, for example, coming after COP28. And we see significant investments being made by those longer-term investors. And as a sovereign, they obviously take a longer term. They're thinking intergenerationally about their wealth, and that presumably is a longer-term perspective that climate change requires.
And that's interesting, and that comes back if you sort of look at geographically where these funds are located. There's a relatively high share that comes from political systems that have a slightly higher emphasis on long term,
right,
and less short term pressures.
Yeah. Well, great. Well, that's a provocative note to end on. Please join me in thanking the Prince for giving us his opening comments. Thank you, sir.
Thank you.
Please.